Hey everyone, welcome back to Corporate Decoder, the place where we unravel the secrets hidden within company filings. And boy oh boy did Taboola.com Limited give us a story to tell in their latest report. We're diving into their quarterly report for the period ending the 30th of September 2025, and it is packed with details that paint a picture of a company navigating a dynamic landscape. Before we jump into the juicy financial details, if you appreciate getting straight insights from these corporate documents, make sure you are subscribed. We also have a Discord community linked in the description below where we discuss these reports further, so you can join the conversation there. Let's kick things off by looking at the company's financial health at a glance, its balance sheet. As of the 30th of September 2025, Taboola had total assets of about $1.5 billion, a slight decrease from over $1.7 billion at the end of 2024. On the flip side, their liabilities are sitting at around $617 million, which means their shareholders' equity stands at a healthy $911 million. This is a solid chunk of equity backing the company. Now, let's talk cash. Taboola had cash and cash equivalents totaling $115 million as of the 30th of September 2025. This is down significantly from over $226 million at the end of 2024. This drop is noteworthy and worth keeping an eye on. Their trade receivables, which is the money owed to them by customers, were around $308 million. Despite the decrease in cash, they've managed to collect a good chunk of what is owed. Looking at their debt, the long-term loan and revolving credit facility is at $74 million. This shows they are managing their borrowings effectively. Now let's move on to how the company is actually performing, the income statement. For the third quarter of 2025, Taboola reported revenues of nearly $497 million. That is a good jump from about $433 million in the same quarter last year. For the 9-month period, revenues reached over $1.3 billion, showing a steady increase. But here is where it gets interesting. Their cost of revenues, especially traffic acquisition costs, also went up. For the third quarter, traffic acquisition costs were over $324 million, and for the 9 months, nearly $901 million. This means a big chunk of their revenue goes back into acquiring customers and traffic. Despite these costs, their gross profit, which is what is left after directly paying for the services sold, is looking good. It rose to $139 million for the quarter and $393 million for the 9 months. That is a sign they are managing their core business operations efficiently. Their operating income, which is profit from regular business operations, came in at $6.5 million for the quarter. This is an improvement from a year ago, but it shows they are working hard to turn a profit after all expenses. For the 9-month period, they reported a slight operating income of $287,000, a significant improvement from a loss of over $21 million last year. This is a very positive sign of progress. Now for the bottom line net income for the third quarter of 2025, Taboola reported a net income of over $5 million. This is a huge turnaround from a net loss of almost $6.5 million in the same quarter last year. And for the 9 months, the net loss narrowed dramatically from over $36 million to just under $8 million. This is fantastic progress towards profitability. Every company's earnings per S-hair or EPs is a key metric. For the quarter, diluted EPs was 2 cents compared to a negative 2 cents last year. For the 9 months, it was a negative 2 cents compared to a negative 11 cents last year. This is showing a clear trend towards positive earnings per S-hair. The comprehensive income statement shows other gains and losses that are not from the main operations. Taboola had other comprehensive income of about $1.1 million for the 9 months, mostly from unrealized gains on derivative instruments. This shows they are managing some financial risks effectively. Looking at the shareholders' equity, we see a few interesting things. There was a significant share buyback program in the 9 months ended the 30th of September 2025. They repurchased over 58 million shares. This can sometimes indicate a company is confident in its future and believes its stock is undervalued. The number of treasury shares, which are shares the company has bought back, increased substantially. This ties into the buyback program. Now, let's talk about cash flow, which is basically the money moving in and out of the company. For the 9 months ended the 30th of September 2025, Taboola generated over $148 million in cash from operations. That is a healthy increase from about $122 million in the same period last year. This shows the core business is generating solid cash. They invested nearly $32 million in property and equipment, including software. This is crucial for growing the business and keeping their technology up to date. Financing activities show cash used for things like debt repayment and stock buybacks. For the 9 months, they used over $236 million in financing. This is largely due to share repurchases and debt repayments, also reflecting the impact of their revolving credit facility. These notes are where the real details and explanations lie. One big story here is the commercial agreement asset with Yahoo Inc. This agreement basically means Taboola is paying Yahoo for traffic over a very long period, 18 years to be exact. This asset is being accounted for and amortized over time. Fair value measurements tell us how the company values certain assets and liabilities. Taboola has warrants, which are like options to buy stock. Public warrants are valued at around $896, while private warrants are valued at just $1. This shows a big difference in how these financial instruments are seen in the market. Let's touch on their financing. They have a 2025 revolving credit agreement providing up to $270 million. This is crucial for their working capital and general corporate needs. They borrowed $126.5 million initially under this facility, which also helped pay off their old 2021 credit agreement. The share buyback program is quite significant, with a total authorization of up to $400 million. They've used a substantial portion of this, showing a strong commitment to returning value to shareholders. Base compensation remains a significant expense even though it is a non-cash item. It reflects the cost of stock options and restricted stock units granted to employees. Related party transactions are always interesting, and Taboola has a significant relationship with Yahoo. Yahoo is a major advertiser on Taboola's network, contributing a notable portion of their revenue. For the third quarter, Yahoo accounted for over 10% of Taboola's total revenue, and for the 9 months, it was over 10.5%. This highlights the importance of this partnership. Taboola operates in one reportable segment, meaning the entire company is viewed as a single business unit. Geographically, the United States is their biggest market, bringing in over $231 million in revenue for the quarter. The rest of the world also contributes significantly, showing a global reach. Now for the management's own explanation of their performance. They highlight their growth in advertisers and publisher partners. A key part of their strategy is operating outside the big walled gardens like Meta and Google. This is a competitive advantage as they claim to offer advertisers a unique way to reach audiences without being limited by those platforms. They emphasize their strong relationships with digital property partners like Yahoo and Apple, and how they plan to grow revenue from these partnerships by improving their algorithms and expanding advertiser bases. Growing their advertiser client base is also a priority. They focus on scaled advertisers, those who spend significant amounts, and they've seen an increase in both the number of these advertisers and the average revenue per advertiser. Looking at their key metrics, revenues are up and their adjusted EBITDA, a measure of profitability before certain expenses, is also showing strength. Their ex-TAC gross profit, a non-GAAP measure that removes traffic acquisition costs, paints a very healthy picture of their core business profitability. It increased by over 10% for the 9-month period. Non-GAAP net income, which adjusts for certain non-cash items and other expenses, is also showing strong growth. For the quarter, it is over $34 million, and for the 9 months, nearly $90 million. This shows their underlying business is becoming much more profitable. Free cash flow, which is cash from operations minus capital expenditures, is also looking good. It was over $116 million for the 9 months, indicating they are generating substantial cash from their operations that can be used for growth or other strategic initiatives. In terms of liquidity, they have about $115 million in cash and cash equivalents. Combined with their revolving credit facility, they believe they have enough to meet their needs for at least the next 12 months. The new revolving credit facility provides them with significant financial flexibility. The share buyback program continues to be a major focus, with further authorizations and significant repurchases throughout the period. This is a strong signal about their confidence in their stock value. It is good to see they have no defaults on senior securities. A small but interesting note, the repurchase agreement with Yahoo terminated in October. This signals a potential shift or conclusion in that specific transaction. And finally, the report is signed off by key executives, including the Chief Financial Officer, Stephen C. Walker. Now for our take on Taboola. Overall, this report paints a picture of a company on the mend and showing significant progress towards profitability. Their revenues are growing, and more importantly, their net income and EPs are moving in the right direction, especially compared to last year. The increase in scaled advertisers and average revenue per advertiser is a positive sign. Their strategy of operating outside the big tech walled gardens might be paying off, offering a unique value proposition. However, we do need to watch their cash levels, which have decreased. While they have a strong credit facility, managing cash flow effectively will be key as they continue to invest in growth and buy back shares. The significant traffic acquisition costs are a reality of their business model, but seeing ex-TAC gross profit and non-GAAP net income improve suggests they are becoming more efficient in managing these costs. The strong partnership with Yahoo remains a significant factor, contributing substantially to revenue. The share buyback program signals confidence, but it is important to ensure it is done at reasonable valuations. In conclusion, Taboola is showing promising signs of improvement and strategic execution. They are navigating a competitive landscape by focusing on their unique position and driving growth through advertiser and publisher relationships. While challenges remain, especially around managing cash and the inherent costs of their business model, the trend towards improved profitability is encouraging. Alright, that is our breakdown of Taboola's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.